Alright, so guys, today we're gonna do another video on the Trading for Noob series. This video is gonna be called Retail Concepts. Retail Concepts, which is, it may not seem as, actually, it will probably seem very significant right now, but this is something that will have a more significant impact later on in your trading journey, or on the video after this, you'll realize why understanding this concept is extremely important. So this is still very significant, but it will have more significance later on. But retail concepts, so just ignore what's on the screen right now. What's on the screen has absolutely no relevancy to what I'm about to say. But retail concepts, what retail concepts are a is a it's what the generic trader does. So a retail trader is what we call, what I would say, just the generic basic trader, which is probably, I'd say, roughly like 70% of the trading market. So 70% of people who claim to be traders tend to trade on retail concepts. Retail concepts are basically like the basic foundations, the simple, terms of trading, which I will go over later on in this video. So it's just what everybody does. But then, so remember how I said 70% of traders are probably like retail traders? That's just me giving you a rough number. Don't go and search it up. But roughly, I would say it's like 70%. So majority of the markets of people who trade are what we call retail traders. Your standard people. In another concept, it's like you have the NPCs in the world who just like live their life, work their job, do their 9 to 5s, whatever, which are just like the normal standard people. And then you have the millionaires, the billionaires, the entrepreneurs, all of them people. Let's say 70% of the population are the NPCs, the normals, the normal people. And then 30% are the entrepreneurs. It's the same concept in trading now. 70% of people just do the basic retail trading, da 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 da. It's called the retail concept. So it's just trading NPCs, but we just say retail traders. I don't know why I didn't make the rules. And then now you're going to have the other 30%, which is what we call smart money concept traders, which is how I trade, which is the more advanced trader. But in order to understand smart money concepts, you have to understand retail. I'm going to explain why later, but this is why I'm saying right now, it will seem significant, like I said before, but it will be more significant when you go onto the smart money concept video, which is what I'm going to explain in the next video after this. But right now, let's just focus on retail concepts. So get your notebooks out and type in simply, or title it, retail concepts. Oops, can't fucking spell. Retail concepts. So I'm not even gonna type anything. Just take your notebooks out and what are retail concepts? I'm not gonna type it. Just pause it for whenever you need to pause it and just write it down. Retail concepts is, like I said, the generic way to trade. So there are what we call a certain sort of like patterns that retail traders just, tend to look at when they're looking at trades, which I'm going to go over. The first one is what we call support and resistance. So this section is called support and resistance. Now, let me just show you an example of support and resistance. So, yeah. Actually, let me just draw it out for you guys. So I assume that you already know that the market moves in three patterns. I think I've done this definitely before in the previous videos. It goes like this, which is what we call an uptrend, where we form a higher high, higher lows, higher highs, higher lows, higher highs. Remember this? If you can't remember, you should probably go and refresh your memory on the first videos. Then we also have this. This is an uptrend. Then we have this. which is what we call a consolidation, which is where the markets are just going sideways. As you can see, we are literally, let me just reduce my camera a bit. We are literally only going sideways. So there's no overall direction. It's not going up, it's not going down, it's just going sideways. And then after, if the markets really wanted to, it can now, oops, do this now. Just go down. Where, remember, in the first video I said it's going to form a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now that is what we call a downtrend. If you wanted to draw out a downtrend, we'll just use a line like this. Well, this is an uptrend version, and then for a downtrend, we'll draw a line like this to show that we are going down and it's bouncing off of this line, which is what we call the trend line. That's another retail concept which I'm going to go over, but let me just start off with support and resistance. So with support and resistance I like to picture it as a foundation of a house and then the roof of the house. So let's say we're in a consolidation, right? Because this is the best way to view it initially when starting. So when you're consolidating, the markets always does one thing or another. It'll go up, then it'll come back down, go up, down, go down, then come up, then down, up, down, up. Okay. And we've just gone sideways. But now a retail trader will think, okay, because I know we are consolidating, when it comes back to here, I'm going to open a sell trade to bet on the markets going down so that I can make money. So then when the markets come down now from here, they'll enter a trade here, bet on it coming down, and then boom, they're going to say, okay, when it comes down to here again, I'm going to take the trade out and I've made £500, which works. Then when it comes here again, I'm going to enter a buy trade so that when the market goes up and up and up and up and up, and then when it comes back to here, I'm going to exit the trade. That is what we call support and resistance. So this bottom area here is what we call support. Support is always on the bottom. And then this area here is what we call resistance, which is always on the top, which is why I said it's like a house. So this is the foundation and this is the roof. Resistance is the roof, support is the foundation, the bottom of the house. You know, you have your floor and then you have your roof. So cool. The market is here currently. Then we go up to resistance, and we know that because we have our resistance line, it's going to bounce off resistance, and then it's going to come back down to the support, and it's going to bounce off the support all the way back up to the resistance. Then it's going to bounce off the resistance down to the support, then it's going to bounce off the support, and this is what's happening when it's consolidating. But then eventually, you know, it's not going to consolidate forever. Eventually, it's going to break out, for example. So once it breaks, let's say we've respected the resistance, we're going to break out of the support, and then when it breaks out now, when it breaks out, so cool. We see that it has respected the support, respected this resistance, but then when it's come back down now here, it hasn't respected the support again. That shows that this support has been broken out of, and then because we are now below the support, this now becomes the resistance. And then when we come back to the resistance now, it's going to bounce off the resistance, then maybe form another support here, bounce off the resistance, and then this is now the new support level. So cool, look, you see, it's easy. Like, we've now just formed a new support. Oops, I don't know why that's happened. We've now just formed a new support. Why? Because this is now the foundation. This is the bottom of the house, for example. Let's just say this is now the foundation, and then now this is the roof of where we're currently at. But previously, before we broke out, this was the support and this was the resistance. So this was the support and this was the resistance. But price was respecting the support and resistance here and was bouncing off it, and then it broke down. It came below to here, and then this became now the support, and then this became the resistance. It just shows that there's been a change in, where the support and resistance is. And it's literally as simple as that. Now, if we go and look in the actual charts, now, you probably will obviously that was me showing it you on a very, very, you know, basic level as well. So take that into consideration. The charts are not going to look as perfect as flipping rainbows and sunflowers and diddly daddy whoosh, but that's what it was in its simplest terms. So look, we have a consolidation here, right? You see this area here that I've marked out as pink. I'm gonna change the color to white. Gonna change the color to white. And now look, what do we have? Resistance here. I mean support here, sorry. My bad. This is support, not resistance. Don't get confused. Why is this support? Because if I'm now to add the line now, cool, look. We came down, came up, came down. Every time we've came down to this resistance box here, I mean support box here, don't get confused, this is support. This is support. Every time we came to the support box, we bounced off it. Came back up, came back down, and bounced off the support box. Came up, came back down, and bounced off the support box. So this just shows you that every time the markets has moved into this area, we have like bounced off the support. So as a retail trader now, remember these are all retail concepts. As a retail trader, I'll be thinking, okay, like if I want to enter a trade now, my best bet is to enter a trade here, and then the markets will go up from this support, maybe to the next resistance. Now, where can we see resistance? You can see here. This is resistance. Why? Because every time the markets, let me just try it. Every time the markets came into this resistance box, it dropped. Look, see? So came to the support, went to the resistance, and it dropped. Came back to the support, came back to the resistance, and then dropped. Didn't really touch the support, but then it came back to the resistance again, and then dropped. Then came back to the support, went back up to the resistance, then dropped. Came back to the support, and then this time it broke the resistance. But as you can see, when we came back to the resistance, well, the formerly resistance, which then turns into support once it's been broken out of, when we came back to it, what happened? So cool, we broke out. Oh, let me just try. We broke out. So because we are now above the resistance, it now turns into support because we are now above it. So now when we come back to it, we are touching the support. And from here, we're going to push up. And as you can see, the markets just kept on going up and up and up. So you can still use these, to enter trades that, okay, I know we're going to enter the support now. So from here, I'm going to enter a trade and bet on the markets going up. I'm going to make money on the markets going up. Then cool. It went up, and then it broke above. Then it came back to the support now. I'm going to enter another trade when it comes back into the support here and bet that the market goes up. And it happens again and again. Cool. Let me repeat myself. As you can see, this area here. Let's focus mainly on this area here. And the thing is, your eyes will adjust to, you may not be able to see it as clearly when you just start to try and look for your support and resistance. But when you actually start to practice it, what I would recommend is go on TradingView, which is what this website is called. Type in GBP USD here and start to look for support and resistance yourself so that your eyes can naturally start to get used to it. But look, as you can see, cool. We bounce here, bounce off here, then come down. Then we come back up, and then we come back down. Then we come back up, then we come back down. Then we come back up, come back down. Then we break below it now. And then when we come back up here, it drops down. Then we come back up here again, and then it drops down. And it's just, this is the so let me just break it down again for you further. Came down to the support and respected it. Then we came up to this resistance. Let me just draw a bit wider. Came up to this resistance, respected it, and then came back down to the support again, then respected it, then came up to the resistance again, then respected it, then came down. Look, and it's just repeating itself. Then we broke through this support. I think I was saying this was resistance. This is support. Sorry, I don't know why I keep on making that mistake. This is resistance. This is support. Do not confuse yourself if I make the mistake again. The bottom is always support. The top is always resistance. But we break through this support, and then when we come back now, this is resistance, because when we are below it, this is now the roof. So we come back to it, and then this becomes resistance, and then we drop down. Now, let me help you visualize how to actually use this to your advantage when trading. Okay, so cool. So let's say we are looking at the markets, and this is what we currently can see. So we can currently see that this is the resistance. So I'm just going to draw this out like this. This is how a retail trader would think as they're entering a trade. So cool. They are going to, let me just slow it down. So cool. As you can see, we've hit the resistance mark now, and I'm going to enter a trade here and bet that the markets is going to come back down to this support area here. Let's see what happens. Cool. The markets drops, and then boom. They'll stop the trade now because they're at the resistance. I mean at the support. And they know from here the market is now going to push back up to this resistance. But you always have to keep into consideration as well that eventually it's going to break out. Eventually it will break out. So it's not going to stay like this forever. If it will stay like this forever, then we would have a stable value of price where it just goes one way and one way and one way and one way. And this is why people think you can't always have a 100% success rate when it comes to trading, because it's not going to be perfect forever and ever. So cool, but you'll understand why. So cool. So he's just made £500, for example. Let's just imagine he's just made £500 from betting that the market's going to go down here to here, and now he's going to bet again that the markets are going to go from here all the way up to here now, which is from support to the resistance, because we are at the support level. So cool. It's come to the support, and now it's going to keep on going up, and then look, see, it's gone up and it's now touched the resistance. So if you betted here, entered the trade here, calculated the amount you wanted to raise, done all of that, and then you betted that when it gets up to here it'll be $500, then cool, you've made another 500. Now we're up $1,000 or pounds, sorry. Then cool, we know that we're at the resistance now, and then it's going to now drop again back to the support, and then what happens? See, it drops again from the resistance to the support. Bet another 500, that's 1,500 made, and so on and so on. We've come back down to the resistance, support, sorry, and it's gone back up again to the resistance. And what's going to happen again? That's another 2,000 made, for example. 500, that's like another 2,000. Now it's going to eventually drop down again from here, because we know this is the resistance level. Look, we're going to see it drop. We're going to see it drop. And guess what? Boom. Now, we targeted from here to here, but it ended up going more. So you probably would have made even more money if you didn't take the full profits here. And remember, guys, you can make money both ways in trading. Don't think the market just has to go up and up and up and up and up for you to actually make money. You can make money at going down. You can make money at going up. If you want me to further explain why that works, then I can. But you just know you can make money at going down and you can make money at going up in Forex. But cool. Let's say, so we're already on 2,000, and let's say we entered the trade here and then we betted it going here, but it actually went all the way here. Like, that's basically double the money. But That's like, okay, 2,500 or 3,000, let's just say. But then now we know it's going to eventually come back to this resistance now. And then look, it's come back to the resistance. It's come back to this resistance. And then from here, we know it's going to drop again because we've just hit the resistance and we're going to drop from that resistance. And as you can see, we dropped. And it's literally that dead simple when it comes to the retail concepts of trading. But don't get too glued on. Just try and understand it as a concept because like I said, I'm part of the 30% which trades smart money concepts. But this is only one concept. And I'm probably even just gonna break this video into like different segments of retail concepts. But as of right now, let's just focus on that. And then another thing is that when you're in an uptrend as well, or a downtrend, you can still use support and resistance levels. So boom, 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 boom. Okay, I'm gonna draw it out like this. Actually, let me just do a bit more. So this is an uptrend, remember? So I'm going to assume, like I said, you remember all of this stuff. If you don't, go and watch it again. But this is now an uptrend. Now I'm going to draw my support and resistance levels. And this is how you can use it to, even further advance your trading. So it doesn't only have to be a consolidation level where you look for your support and resistance levels. It can also be when you're going in an uptrend or a downtrend. Let's see. Okay, cool. So the market's gone up, formed. So, okay. Let me just type this in. Resistance. And then this support. Yeah, I'm gonna do multiple videos on retail concepts because there's way more retail concepts than just this. There's way more retail concepts. So this is just gonna be the first video on retail concepts, support and resistance. So this is right now because the markets are currently here. Let's just imagine the markets are currently here. Follow my mouse. Don't look ahead. Follow the mouse. So cool. Price goes up. Actually, I'm gonna do it like this. Just bear with. Sorry. Okay, so follow the mouse. Price is currently going up here. Okay, so we're going up towards this. Because we are going up towards it, this is the roof, so it's now resistance. And then we bounce off of the resistance, and then we come down. So we could enter a trade here, and then it comes down. Then boom, it breaks through it now, through the resistance, and then forms a new resistance here. So when we stop here, we know that this is the new resistance that's been formed. But then because this new resistance is formed and we're currently up here now, this becomes support because this is the bottom. So because this is the bottom now, we know that when price comes to here, we are going to bounce off it and then push up. And then on top of that, because we know we are in an uptrend, we know it's going to break the resistance. This is why it's important to know what sort of trend and direction the market's going in. Because if you thought this was a consolidation here, you'd be thinking, no, we're just going to go sideways and sideways and sideways. But no, you know we're in an uptrend now. So you know eventually we're going to break through it and the upwards motion because we know we are in an uptrend. See how we're combining like the different stuff together. We've combined uptrend and support and resistance. See why you have to like advance the way you think. So that's why I feel like if you can't remember uptrends, go and watch the other videos, please. It'll help you understand it more. But cool, we've broken above this area here, this resistance. I mean, this previous resistance, which is because we are up here, is now support. And cool, we come back down to the support, and we know that when we get to this support now, we are going to break through this resistance. Why? Because we are in a uptrend, an uptrend. So when we break through this resistance now, yes, and we are at the top here now, this becomes the new resistance area. and then this becomes support now because this is the bottom. Follow my mouse. We are currently here. So we tap into this resistance. We come off this resistance. We could enter a trade here if we wanted to. But then we come back down to this support. And then because we all know we are at the support, like price is now going to push up to this resistance. And it's the same thing over and over. This is why it's important. I'm going to repeat myself. This is why it's important to know what sort of trend you're in. Because like I said, if you thought you was consolidating, ideally when price got to this, okay, let me just, wait. No, I'm going to do it from here. So if you think we are in a consolidation, right? I'm going to draw this out as wrong. This is why it's important again. But if you thought we was in a consolidation from this point here, you'd be thinking, okay, price is just going to do this and this and this and this and this. And you'd be thinking that when it comes back to this resistance, I'm going to draw this out as red because this is wrong. You'd be thinking that when price comes to this resistance, it's just going to break. I mean, it's just going to bounce off it again. But then look, because now you know we're in an uptrend, you know it's going to break above it. And then, but if you had entered the trade here for it to sell and drop, but then it went up, you would have lost money. But because you knew that price is in an uptrend and it's going to break above it, you didn't enter that trade now. You knew price was going to go up and you knew that you was in an uptrend and you knew it's going to break above the resistance. And then you knew that when it comes back down again, you know this now, you know that when it's going to come back down to the support, and it's not, when it comes back down to the support, it's going to bounce off it and then go up. I'm going to change this color to blue because this is correct. You see, now let's go and do this in the opposite sense where we're in a downtrend now. And it's the same thing. Same thing. Matter of fact, just think about it. Okay? Think about it. I actually want you to think about it. Where is this? Oh, wait, I haven't drawn it as good. Where is the support and resistance now? It's still the same thing. Just before you even go on to continue watching the video, just think about it. Pause the video and think about it. Genuinely pause it. Genuinely pause it. And try and picture it for yourself as to what is the support and resistance. 3, 2, 1. Okay, now assuming that you've paused it and, you know, you've actually tried to think about it. The reason why I recommend you to think about it is because when you think about it, you know, it will stick more into your brain rather than just, you know, you just mindlessly just watching this. So actually try and think about it. But I'm going to draw it out for you. Cool. It's the same concept. Same concept. I'm going to change the color back to blue because color coordination is key to understanding. So blue is the correct orientation. But blue, like I said, we're in a downtrend. This is our low, 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 high, low, 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 high, low, 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 high. We start off here. Yeah, we start off here. This is the support now because this is the foundation. This is the bottom. Then we go up and form this resistance. And then I'm going to do another thing that's just going to open your mind even more after this. So stay tuned. This is support now. And then this becomes resistance now here. Then boom, we break down below here. And then this is now the new support. But then this is the top and this is the resistance. Then we touch here. And then this is now the resistance. Then we break below this support. And then this becomes the resistance. And then this becomes the support. You see, understand, it's so easy. So easy. But then eventually now, like I said, the markets do stay in the same orientation 24/7. So eventually, it's going to start consolidating again. And then maybe, once you realize you're consolidating, you've changed from a downtrend into a consolidation, maybe it's going to come back down and continue the downtrend again, form a new downtrend. But then maybe it's going to come back up into this consolidation zone and then boom, break above this, form a resistance, and then use this as support. Let me just extend it so you understand. Break this former resistance, and now we are going to start an uptrend. It's broken this former resistance, which is now using it as support, and then we had, oops, we had bounced off of this resistance here and used this as support. Then once we bounce off here, we form an uptrend, break this resistance here to go support, and to go to this resistance, which is this resistance, and then we come back down to this former resistance, which is now support. And it's the same thing. So you see, guys, we've gone from a downtrend into a consolidation, into a mini downtrend, back into an uptrend. But because we understand the difference in, downtrend, uptrend, and consolidation, we can now add support and resistance to understanding the levels of where the uptrend is going to bounce off and where the downtrend is going to bounce off and where the consolidation is going to bounce off. And then when you sorry, and then when you combine all of those things together, now you can start to formulate trends. You know that because price is going to hit the resistance, which is the roof, it's going to come back down. So you're going to enter a sell trade on it coming back down. And when it hits the support, the bottom, is going to go up. So you're going to enter a trade betting on it going up. And then you can combine trend lines. No, not trend lines. You can combine uptrends and downtrends and consolidations to formulate trades. Now your mind is engaged into trading. Now you can start thinking, okay, how much am I going to risk? Now you can start thinking, and this is the thing now, that's not the only what we call confluence that you can use. A confluence is a reasoning to entering a trade. Write that down. A confluence is a reasoning to entering a trade. Now we can start to add different confluences. There's more, like I said, this is just one confluence. Now we can start to add different confluences into our trades to give us better certainty of, you know, um, better certainty of being confident in our trade. Then we can start risking more, risking more money, saying that this is a better trade than this one, da 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 da. And it's the same thing every single day. But yeah, that's it. Support and flipping resistance.